Hello everyone. Starting a business in 2020-25 is more accessible than ever, but at the same time, it can feel overwhelming when you're trying to figure out the right steps. Everywhere you look, there's conflicting advice, endless paperwork, and so many voices telling you what to do that it's hard to know what really matters. But here's the truth. If you want your business to be taken seriously, if you want to protect your personal assets, investment, and if you want the freedom to grow without unnecessary risks, forming an LLC is one of the smartest moves you can make. An LLC is more than just a legal structure. It's the foundation that gives your business credibility, flexibility, investment, and protection. The problem is most people think it's complicated, expensive, and reserved for large companies. That's simply not the case. Setting up an LLC in 2025 can be straightforward if you know the right process. Investment. And by the end of this breakdown, you'll have a clear roadmap that takes you from the very first step to being fully compliant and operational. Whether you're launching a side hustle, starting an online business, investment, or building a long-term company, the journey begins here, and getting it right from the start will make all the difference. When you decide to set up an LLC in 2025, the very first step, and arguably one of the most important, is choosing the right state and business name. While many people assume that forming an LLC is the same in every state, the truth is that each state has its own rules, filing fees, and tax structures that can either benefit you or cost you much more in the long run. For example, some states like Delaware, Nevada, and Wyoming have developed reputations for being business-friendly, offering low fees, simple compliance, and in some cases, added privacy protections. On the other hand, if your business operates locally and you'll be running it primarily in your home state, setting up an LLC there might be the simplest and most cost-effective path. This decision has long-term implications. If you register in another state, you may end up paying for foreign qualification fees and ongoing requirements in multiple states, which can create unnecessary complications. Therefore, you need to weigh whether you want the possible benefits of a business-friendly state or the simplicity of registering right where you are. Once the state is decided, the next crucial step is choosing a business name. Your LLC name isn't just a label. It's your brand identity, the way customers recognize you, and the first impression investors or clients may have. The key is to strike a balance between creativity and compliance. Investment. Every state requires that your LLC name be unique, meaning you can't use a name that's already in use by another registered business in that state. That means you'll need to run a business entity search on your state's Secretary of State website. It's a simple but critical step because if you try to file a name that's already taken, your application will be rejected. Investment, costing you both time and money. Beyond state requirements, you should also think ahead, check if the matching domain name is available, look for potential trademark conflicts. Investment, and ensure the name you choose aligns with the image you want to build for your business. Imagine building your brand for years only to get a legal notice that you're infringing on another company's trademark. It's avoidable if you do your due diligence up front. Another important detail is that most states require your LLC name to end with LLC or limited liability company. This isn't just a formality. It signals to the world that your business is a legally recognized entity. This helps establish credibility with banks, investors, and even customers who may feel more comfortable working with a company that looks professional. Think of it like a stamp of legitimacy. At the same time, don't get overly complicated with your name. While some people think adding fancy words makes a company sound more official, clarity often works better. A clear, memorable name that communicates what your business does will be far more valuable in marketing than something that sounds sophisticated but leaves people confused. In 2025, there's also a growing emphasis on digital presence. Investment, that means your name isn't just about state records anymore. It's about how people will find you online. Before locking in your choice, check if the domain name is available and ideally secure it right away. Even if you're not building a website today, you will need one in the future, and grabbing that domain early prevents someone else from taking it. Social media handles are another factor. Consistency across platforms makes your business easier to find and strengthens your brand identity. The process may feel tedious, but skipping this step often leads to regrets when you're forced to rebrand later. When deciding on a name, it's also wise to think about your long-term vision. Avoid overly narrow names that might box you in if you expand your services later. For example, calling your business California Tea Shirt Printing LLC might work if you only ever want to print shirts in California. But what if you expand into hats, hoodies, or even a national brand? Suddenly, your name becomes a limitation. Instead, pick something that reflects your brand's essence without restricting its growth potential. One more consideration that often goes overlooked is perception. The name you choose affects how customers, partners, and investors view your business. A playful, casual name might work for a creative startup, but could raise eyebrows in professional industries like finance or law. The right name should resonate with your target audience and signal the tone of your business. It doesn't mean you need to overthink it, but it does mean recognizing that names carry weight in terms of credibility and trust. All of these decisions, state, uniqueness, professionalism, investment, and brand alignment, are part of laying a foundation that you won't have to revisit down the line. Too many new business owners rush through this stage, treating it like a box to check off rather than a strategic choice. But choosing the right state and name isn't just about paperwork. It's about setting up your LLC in a way that protects you legally, saves you money, builds your brand, and creates the foundation for growth. Getting this right from the beginning makes every step that follows smoother, and it ensures you're not just starting a business. You're building it with intention and foresight. After you've chosen your state and secured a unique business name, the next big step in setting up your LLC is filing the Articles of Organization. This document is essentially the birth certificate of your company. It's what legally brings your LLC into existence. Without it, your business is just an idea investment, no matter how solid your plan might be. In 2025, the process has become easier thanks to digital filing systems in most states, but it still requires careful attention to detail. A small mistake on this document could delay your approval or force you to pay additional fees to correct it. That's why understanding exactly what's required and how to avoid common errors can save you both time and frustration. The Articles of Organization is filed with your state's Secretary of State office, though the exact name of the governing body can vary depending on where you live. This document outlines the essential information about your business. Typically, you'll be asked for your LLC's legal name, the address of your business, the name and address of your registered agent, the type of management structure your company will use, and sometimes a brief description of what your business does. And each of these pieces of information matters. For example, your registered agent must be a person or business located in the state where you're forming your LLC investment, and they're responsible for receiving official notices and legal documents on behalf of your company. If you skip this step or provide inaccurate details, your filing could be rejected outright. Filing fees are another factor to be aware of. They vary significantly from state to state. Some states charge as little as $50, while others may cost several $100s. On top of that, a few states also require additional franchise taxes or publication fees. Investment. These costs are important to consider in your budget because forming an LLC isn't a one-time expense. It's the start of an ongoing relationship with the state that comes with annual responsibilities. In many states, investment, you can file your Articles of Organization online, and this is usually the fastest option. Processing times also vary. Some states approve your LLC in just a couple of days, while others can take several weeks if you choose regular processing. Expedited filing is often available for an additional fee, which can be worth it if you're in a hurry to get your business operational. When completing your Articles of Organization, one area where many new business owners stumble is the management structure. You'll typically have to specify whether your LLC will be member managed or manager managed. A member managed LLC means that all owners or members investment are involved in running the day-to-day operations of the company. A manager managed LLC means the members appoint one or more managers who can either be members themselves or outside professionals to handle operations. Investment. The choice you make here depends on how hands-on you want to be and how many members your LLC has. While it might seem like a small checkbox on a form, this choice has practical implications for how decisions are made in your company. Another area that deserves close attention is the business purpose section. Some states require a very specific statement of what your business will do, while others allow a more general description like to engage in any lawful business activity. Choosing the broader description often gives you more flexibility down the line. If you write something overly narrow and later expand your services, you may find yourself needing to amend your articles, which can mean more paperwork and fees. One of the smartest moves you can make at this stage is double checking everything before you hit submit. Typos in your business name, wrong addresses, or mistakes in the registered agent's details are among the most common errors that can cause rejection. It's worth taking an extra few minutes to review every line carefully, or even asking a second set of eyes to look it over. In 2025, many states also offer online dashboards where you can track your filing status, so take advantage of these tools to stay updated on your application's progress. Once your Articles of Organization are filed and approved, your LLC officially exists in the eyes of the law. That's a huge milestone, but it's only the beginning. You'll receive a stamped or digital certificate of formation from your state, which you should keep in a safe place. This document will often be required when opening a business bank account, applying for licenses, or entering into contracts under your LLC's name. Without it, you'll have no proof that your company is a legitimate entity. It's also worth mentioning that while filing your articles is largely a straightforward process, some business owners choose to hire a professional service to handle it for them. These services typically cost extra. but they can save you the headache of dealing with paperwork and ensure everything is filed correctly. Whether you do it yourself or hire someone, the goal is the same: to get your LLC legally recognized without unnecessary delays. Investment. By the time you've completed this step, you've moved from the planning phase into the execution phase. Your business is no longer just a concept. It has a legal identity that separates it from you personally. Investment. This separation is what gives you liability protection, the ability to shield your personal assets from business debts or lawsuits. Filing the articles of organization is what makes that protection real, and doing it correctly sets you on a strong path forward. It's a moment of transition, the point where your idea officially transforms into a recognized entity that can grow, operate, and succeed in the marketplace. Once your articles of organization have been approved and your LLC officially exists, the next step is to create an operating agreement and secure an employer identification number, or EIN. And these two elements might seem like formalities, but they are critical pieces that determine how your business functions on a daily basis and how it's recognized by the IRS and financial institution. Skipping or rushing through them can lead to confusion, disputes, or unnecessary complications down the road. In fact, this stage is where you move from the legal recognition of your LLC to the practical structure that will keep your company running smoothly. Let's start with the operating agreement. Even though many states don't legally require an LLC to have one, it's still one of the most important documents you can create. Think of it as the rule book for your business. It outlines who owns what percentage of the company, how profits and losses will be distributed, how decisions will be made, and what happens if a member wants to leave or if the company is dissolved. Without this agreement, the default state laws will govern these issues, and those laws may not align with how you actually want to run your business. By writing your own operating agreement, you take control of those decisions in advance, which prevents misunderstandings and protects everyone involved. For single-member LLCs, some people think an operating agreement is unnecessary because there are no partners to argue with, but having one is still incredibly valuable. First, it reinforces the separation between you and your business. Investment, which is key to maintaining your liability protection. If your LLC is ever challenged in court, being able to show that you treated your business as a distinct legal entity, complete with its own rules and documentation, strengthens your defense. That second, banks and investors often ask for a copy of your operating agreement before they're willing to work with you. Without one, you may find it harder to open accounts, secure funding, or bring in partners later. Investment. Drafting the operating agreement doesn't have to be complicated. Many online resources and templates can guide you through the process, and you can always consult a lawyer if your business structure is complex. The most important thing is to address the core areas: ownership percentages, voting rights, profit distribution, management structure, member responsibilities, and procedures for resolving disputes. By setting clear expectations from the start, you reduce the chances of conflicts later on. Think of it as insurance against the kinds of issues that can tear businesses apart. The other key part of this step is obtaining an EIN. This is essentially a social security number for your business, investment assigned by the IRS. It's used to identify your LLC for tax purposes, but it also serves many other practical functions. You'll need an EIN to open a business bank account, hire employees, file taxes, and apply for certain business licenses. Some banks won't even let you open an account under your LLC's name without one. And operating your business through a personal account is one of the fastest ways to blur the line between you and your company. That's dangerous because it puts your liability protection at risk. An EIN ensures that all financial activities are clearly tied to your business, not you personally. The good news is that getting an EIN is free and straightforward. You can apply directly on the IRS website, and in most cases, you'll receive your number immediately after completing the application. The process only takes a few minutes, and it doesn't cost a dime. Unfortunately, many entrepreneurs pay third-party services to obtain an EIN for them, not realizing that they could do it themselves without spending extra money. Unless you have a very specific situation, such as being a foreign individual who doesn't have a social security number, you don't need to pay anyone for this step. In addition to being free, the EIN has the added benefit of protecting your privacy. Without it, you may be tempted to use your personal social security number on business forms and tax documents. That increases the risk of identity theft. By using an EIN instead, you create a clear separation between your personal and business identities, which not only enhances professionalism, but also adds a layer of security. Together, investment, the operating agreement, and EIN create the framework for your LLC to function effectively. The operating agreement governs how the business will run internally, while the EIN connects your LLC to the outside world of taxes, banks, and employers. One provides structure, the other provides recognition. Both are essential, and both send a message that you're treating your company seriously. At this stage, your LLC isn't just a legal entity on paper. It's a business that has rules, protections, and an identity of its own. By investing the time to craft a strong operating agreement and securing an EIN directly through the IRS, you're setting yourself up for long-term stability. It might feel like extra paperwork now, investment, but these steps will save you countless headaches later, whether it's avoiding a dispute with a business partner, making it easier to get financing, or simply ensuring that your liability shield holds up under scrutiny. It's meant these actions reinforce the foundation of your company. By completing this step, you've moved closer to having a fully operational business. You're not only compliant with the legal requirements, but also equipped with the tools to protect your interests and operate professionally. It's a small investment of time and attention that pays off enormously in the credibility, investment, functionality, and security of your LLC. Once your LLC is formed, your operating agreement is in place, and you've secured your EIN, the next step is not simply to sit back and assume the job is done. Forming an LLC is only the beginning. The real challenge is keeping it in good standing year after year. This is where compliance comes into play. Staying compliant with annual requirements ensures that your LLC maintains its legal protections, continues to be recognized by the state, and preserves the very liability shield you worked so hard to create. Too many business owners form their LLCs with enthusiasm, only to neglect these ongoing obligations. The result? Late fees, penalties, suspension of the LLC, or even the loss of liability protection altogether. Understanding what's required in developing habits to stay on top of it will save you from unnecessary headaches and costs in the future. The most common ongoing responsibility is filing an annual report or statement of information. Almost every state requires this in some form, though the terminology and frequency vary. Some states require annual filings, while others require biennial filings. The purpose of this report is to update the state on your company's basic information, such as addresses, members, managers, or your registered agent. It's not complicated to complete, but the deadlines are strict. Missing one can lead to late fees that add up quickly. In some states, failing to file on time can even cause your LLC to be administratively dissolved, meaning the state no longer recognizes it as a valid business. Reinstating a dissolved LLC is possible, but it's a costly and stressful process you'll want to avoid. That's why setting reminders for these deadlines is critical. In addition to annual reports, many states also charge an annual fee or franchise tax to keep your LLC in good standing. This is separate from your federal and state income taxes, and it's easy to overlook. For example, California requires an $800 minimum annual franchise tax, regardless of whether your business earns a profit. Other states may have smaller fees, but ignoring them has the same consequences, penalties, and eventual dissolution of your LLC. The key here is to budget for these costs up front and treat them as part of the cost of doing business. By planning for them, you won't be caught off guard when the bill comes due. Another essential part of compliance is maintaining a registered agent. When you first filed your articles of organization, you listed an individual or business as your official point of contact for legal and tax documents. That requirement doesn't go away after your LLC is formed. If your registered agent moves, quits, or becomes unavailable, you're required to update the state promptly. Failing to do so means the state or legal system may not be able to reach you, and that can lead to serious consequences. Imagine missing a lawsuit notification because your registered agent wasn't updated. That could result in a default judgment against your business. Keeping your registered agent information current is a small step with huge implications. Investment. Perhaps the most overlooked part of staying compliant is maintaining the separation between your personal and business finances. This isn't just good bookkeeping, it's a legal necessity. The entire purpose of forming an LLC is to separate your personal assets from your business liabilities. If you mix personal and business funds, investment, you risk what's called piercing the corporate veil. That means a court could decide your LLC is not truly separate from you, leaving your personal bank accounts, home, or other assets vulnerable to business debts and lawsuits. The best way to avoid this is by using your EIN to open a dedicated business bank account, keeping all income and expenses for the business separate, and paying yourself properly instead of just dipping into business funds. Compliance also extends to keeping accurate records. While you may not be required to submit detailed reports to the state beyond the annual filing, keeping organized records of meetings, major decisions, investment, and financial activity helps protect your LLC. If you're ever audited or taken to court, these records demonstrate that your business is being run professionally and legally, even in single-member LLCs where formal meetings aren't required. Documenting important business decisions is a smart practice that reinforces the legitimacy of your company. On top of state compliance, don't forget about local and federal obligations. Some cities and counties require business licenses or permits that must be renewed annually. If you're hiring employees, you'll need to stay compliant with payroll taxes, workers' compensation, and employment regulations. The IRS will expect you to file taxes properly under your EIN, and depending on how your LLC is taxed, default as a sole proprietorship or partnership, or elected as an S corporation, you'll have different reporting requirements. Investment. Ignoring these responsibilities can lead to fines or investigations that could damage your business reputation. The key takeaway is that forming an LLC is not a one and done process. The real success comes from maintaining it properly. And think of compliance as routine maintenance, like changing the oil in your car. You wouldn't drive your car for years without taking care of it and expect it to keep running smoothly. Your LLC is the same way. Investment. Regular upkeep ensures it continues to protect you, function legally, and maintain credibility with banks, investors, and customers. By committing to staying compliant with annual reports, fees, registered agent updates, financial separation, investment, and record keeping, you're safeguarding the foundation of your business. These tasks may seem small individually, but together they make the difference between an LLC that thrives and one that falls apart. Compliance is what allows you to focus on growth and opportunity, knowing that your business is secure. It's the discipline of taking care of the behind the scenes work that ensures your LLC remains strong, resilient, and ready to handle whatever the future brings.